Hey everyone, today we have the pleasure of having Sohn, CEO of Recruiter.com on our show. Recruiter.com is a SaaS platform for talent acquisition. Now, Evan comes from a very extensive background in sales and marketing, having held executive level roles across several technology companies, many of which went through successful acquisitions. And today, along with being the CEO of Recruiter.com, Evan also serves as an advisor to emerging tech startups. To everyone listening in, I think we're about to unpack a lot of knowledge today. With that said, Evan, welcome to the show.
Hey, Shaheem. Thank you so much for having me. Nice family photo you got there in the background. So we'll talk about that some other time, but nice photo.
Sounds good. Thank you. Thank you. No, thank you for taking the time to come on our show. Evan, let's jump right in. Let's talk about the founding story of Recruiter.com.
It's a great question. And so Recruiter.com, I got involved with Recruiter.com about 3 years ago. I just checked my LinkedIn profile. So it was about a little over 3 years ago. Recruiter.com was really a media company. I come from a sales background, really. So for me, it's, what are you as a company is what do people buy from you? What does the purchase order look like? How do you make money? Right. So Recruiter.com made money selling insertion orders, right? Advertising and insertion orders like a media company. So what's a media company? A media company has 3.5 million social media touch points, 48,000 Twitter followers, runs 4 of the 10 largest LinkedIn groups, 850,000 plus global recruiter and HR professionals, 3+ articles a day through our network, a monthly magazine. That's what a media company does. And I was brought in by one of the original investors in the company to go, hey, what can you do, Evan, with this great asset called Recruiter.com? And to me, frankly, I said, if you own the domain name Recruiter.com and you're not worth $1 billion, someone's got to fix that, right? So my thesis really 3 years ago, and I became chairman of the board, really March 31 is my anniversary of becoming the chairman of the board, 2019. And I became CEO in June of 2020 at the height of the pandemic, is, hey, let's now take this platform and really turn it into a SaaS platform for talent acquisition. How do we capitalize on the growing trends of talent acquisition, the gig economy, all these things tied together? And remember, what the world looked like pre-pandemic was actually a very, very tight labor market also. So we were in this world of hard to find talent. And now how much more so? In May of 2020, I sat down with the board and I said, hey guys, when this COVID is over, when the pandemic is over, the job market's going to be in absolute disarray. And we're going to be there to really help get the economy back up and running, help companies of all sizes. They said, prove it. And I said, all right, I'll step down. I quit my old job, became CEO, everyone shifted over, and we've been growing ever since.
Fair enough. Now, that's a pretty big decision, though, to switch a company from a media company over to a SaaS company. Yeah. What factors played a role in you making that decision and also convincing everyone else in the company that this is the direction we need to go in?
So, it's an excellent question. You start looking at the talent acquisition industry, right? And I've done both, sort of build markets from scratch and then reinvent an industry. Reinventing an existing industry actually is a lot easier than building a market from scratch. Talent acquisition is a $76 billion market, and this goes back to 2017, so probably even bigger now. So you'll say, well, how about ZipRecruiter, Indeed, and LinkedIn? And I'll say to you, that segment is a $26 billion segment of the $76 billion market called candidate identification. So LinkedIn is doing about, let's call it $1.5 billion. Let's call ZipRecruiter $1 billion, just for argument's sake, and let's call Indeed another $1.5 billion. So what is that? That's $4 billion of a $26 billion market. Right. So there is a lot of room for lots of people, and it really, what we're really doing is reinventing this market. And I really saw the opportunity to really reinvent the way that people hire. Historically, the talent acquisition market really hasn't changed, really ever. You would post a resume, you would collect resumes, you screen the candidates, you interview the candidates, you hire. That hasn't changed since the New York Times. You put a job on the classified ads and you mailed in your resume. So now you put the job on ZipRecruiter and you collect the resumes, et cetera. We have bots and all these other things, but fundamentally that process hasn't changed. And so there were really 2 ways to then go about that process. You either did it yourself or you hired a headhunter, recruiter, et cetera. Either you did it yourself and, oh my God, it's so complex now to do it because the crazy market that we're in, we could unpack that as well. Or I paid headhunter fees. Now that made a lot of sense when Shaheen would have one job for his whole life, or two or three jobs in his whole life. And now we've entered what we call the job hopper economy, where that's just never going to happen again. And again, I'm exaggerating, but to prove a point. So we don't want to pay the headhunter fees. We don't have time to do it ourselves. What's the median? The median really is, let's now go turn to an on-demand platform that through a subscription offering and no placement fee, I can get the talent that I want. And that's really what we're doing as recruiter.com.
Gotcha. And it's kind of like a win-win situation where you're able to, if you wanted to, I believe you can use the platform to find candidates yourself as well, or hire a recruiter, all the independent recruiters, right? Right.
And when you're hiring the recruiter, it's really not as a placement fee, right? You're hiring someone to do this on your behalf. Think about recruiting more like law. If you were going to do a real estate transaction over in San Diego, California, you're not going to have your tax attorney do it for you. You're going to hire someone local to San Diego market or California and do that transaction for you. You're not going to hire them full-time unless you're going to have a full-time amount of real estate transaction. You're going to hire them, retain them to do that specific project. You're going to pay them to do that project. And when the project's over, you're done. Talent acquisition, we believe, is really moving in a very similar, very fragmented, highly specialized, et cetera. The recruiter that Pfizer wants to find junior scientists does not resemble at all the recruiter that a Zoom wants to find Java developers. Nor does it look like the recruiter that a law firm wants to find their talent. It's really incredibly segmented, highly segmented, fragmented, and growing. And it's just a huge market ripe to be reinvented.
Right. And, on that note as well, I've seen more and more platforms come out that are more specialized recruiting platforms, meaning like this is it's a SaaS platform, but just for like IT resources. And then another one maybe for just for like sales people.
So totally agree. So here's the interesting thing. Those products are all actually competing against LinkedIn, ZipRecruiter, and Indeed, right? They're all a do-it-yourself platform that says, hey, you don't use those platforms, use our platform. Do it yourself, but you're going to do it yourself in a maybe it's a curated group of people, et cetera. And we have that, let's call it self-service career community sort of model as well. We run B2B Bistro. We have a number of other career communities that we run and operate. But what we actually believe is that the real, let's call it the real creme de la creme here is you don't want to do it yourself. You could do your own tax return, Shaheen, right? You could do your own tax return, or you have platforms that'll help you, right? You're doing it yourself, but you've got to work all the tools yourself, or you say, hey, you know what? You're an accountant. Go get my taxes done. I'll pay you to get my taxes done. And we actually really believe that talent acquisition, I'll give you a soundbite. Not too long ago, the expression finding a job is a full-time job, right? You've heard that expression before. That doesn't really exist anymore. And I would say finding people is a full-time job. Finding talent is a full-time job. And as a business owner, you don't want to be doing that yourself. You have other things to be doing. It's much more complicated now. You don't really want to run your own tool. You want to have a tool and access to a tool, but you actually want someone to run it for you. We do that. Our service, MyRecruiter, you can go to start.recruiter.com. We run our tool for our clients. So you could use our tools on your own, or we could run them for you as a managed service. And that's really what we think is really the cat's meow. Because if you're hiring, whether it's for your small business or for your enterprise, you don't really want to learn a new tool. You just want the outcome of that tool, right? When you hire your accountant to do your taxes, do you really care what tools your accountant is using to file your taxes, or that your taxes get filed? That's really what it is. Do you care if your lawyer out in San Diego is using LexisNexis or what other tool they're doing? Who cares? Who cares what they're doing? Just finish my transaction for me. And that's really, what we really bring to the table.
Right. Yeah, no, it makes a lot of sense. And honestly, like we're hiring all the time now too. And it takes like 3 months to fill a role sometimes. And it's like, our founders, my co-founder and CEO, she's involved when she could be doing a lot of better things pretty much. Right. So no, it makes a lot of sense. Let's switch gears a little bit, Evan. You have, of course, you're coming from that sales background. So what is some like advice or tips that you can provide like for founders when they're growing their technology companies, whether they pivoted from one kind of company to another, or they're just building it from the ground up? What have you found has kind of been like the factors that lead to a successful sales organization?
So it's great. So, I'm gray hair. So I'm not a young guy like yourself. And I've really had the fortune of being involved with some really, really awesome people and some great companies. I started my first company at 21 in mobile computing back in '89. So the '90s, and mobile looks nothing like the mobile that you see today. And then I was in security for a while through an acquisition. My first company got acquired by Dun & Bradstreet. Then I was back in mobile. Then I was in security. We got acquired by what became Symantec. Went back into mobile, was in payments, got acquired there too. So first of all, there's a great book called Getting to Plan B. It's a great book, and it opens, like, the opening chapter is really about, like, PayPal is like Plan E. That whatever premise you have going out to start your business is going to evolve and going to change because you have this product market fit. You built this product and you're trying to figure out, gee, what's the best way to deliver that to the market? What market aligns with this product? And then you're tweaking along the way, right? Oh, what do you know? We built these 5 features, but what people were really interested in was this 2 features, and this really changes the overall market. So I think you can't be afraid to sort of, pivot, adjust, et cetera. I think the other fundamental rule is, I have like 9 rules that I sort of live by from a sales perspective, is really never do anything you're not being measured against. So it really comes down to, and I think that's an overarching one, of really figure out how you're going to win and focus on the things that you're going to win. One of the greatest challenges for a high growth company is to know the difference between a temptation and an opportunity. And if you focus on the things that you're being measured on, you're going to say, gee, is this an opportunity to help me get to that goal? Or is it a temptation that's going to be a distraction? And every now and then you get these distractions, and people love distractions because you could wake up and say, wow, look what I got done. I got all these distractions done. But you wake up a year later and you actually haven't accomplished anything because you've been distracted the entire time. So, I will spend the day getting distracted, and then I'll spend the night catching up because I don't want to wake up the next day going, gee, I didn't get anything done the day before. So that I think that's really, really part of it, setting very key objectives, and the elements that you need to really achieve those objectives on a regular basis.
Gotcha. So just making sure that whatever it is you're doing is measurable, and then making sure you're tracking it and setting goals, seeing if you're achieving it, making sure everything that you're doing is trackable, right? Yeah.
And then I'll take one more, as long as we're doing this, is really focus on one thing, right? What is the one thing that's going to make an impact? I had a sales guy I worked with out in Silicon Valley, incredible guy, and he was like, when you go to a meeting, there's one goal. Don't go in, hey, Mr. Customer, I've got 25 things to talk to you about, right? Why? Go in, what's the one thing? And let's take it to the next level. What's that one thing that's going to move it to the next step, and move it to the next step, and move it to the next step? And bombarding the customer or prospect or partner with 27 things when you have one thing that you want to focus on, why not just focus on the one thing? So go in a meeting, like, what are you going to do to get that one thing? And think about, what's the one thing? If I have an opportunity to ask Shaheen for one thing, what is that? Maybe it's, hey, Shaheen, can I come back 2 months from now? Or is it, hey, tell me about what your problems are, et cetera. So I think those are really, at the end of the day here, the critical elements there. And then I had another CEO I learned something from. I always try to learn something from everybody. So I had a CEO that really said, you want to be and this company was really in a real commodity oriented business. And most of us are actually in, at some level, Me Too organizations. We might do it a little bit better than the next guy, but there are other people doing it unless you're inventing something. You want to be a client's first phone call, right? I don't want to be your vendor. I want to be your partner. When Shaheen has a problem, I want to be the guy that Shaheen calls when he has a problem regarding my industry and my sector. I want to be that first phone call for you. And my team's heard me actually on the phone with a prospect or with a client. Hey, was I your first phone call? And they'll go, well, you were one of my first. I'm like, well, I want to earn you to be your first phone call. Because when you're a client's first phone call, that's a whole other level. That's a whole other level that you've reached, where that forget about winning the business. You've won their trust, and that's half the problem, or more than half the problem.
Yeah, I think that's huge. Actually, I really like that. become the client's first phone call. I experienced a little bit of that recently. I did like just a few hours of consulting work for somebody, and right before they were building the product, I was like, hey, like go out and do customer discovery, taught them how to do that a little bit. And then once the product is ready, like I was that first phone call saying, hey, Shaheem, product is kind of ready. Like, what do I do next? Can I like pick your brain on that? And I was like, wow, okay, like that's amazing. Yeah, they thought of me in that moment. So I know exactly what you're talking about. That's great. So Evan, what does it look like? So you've been in companies which have been acquired, and then recruiter.com went public, under your wing. What does a sales and marketing org within a company need to look like in order to be ready to be acquired for a successful exit strategy?
So what's funny is my first company at the beginning of 1998, we actually said, all right, we want to be acquired by the end of the year. And we actually set a strategy out, back in 1998. What do we need to do? What does things need to look like in order for that to happen? And I think that, the lesson is for any entrepreneur, business owner, get very good, crystal clear on where you need to be. The more CEOs I've met with, that when I would say to them, well, where do you want to be in a year? And they tell me their 5-year plan is to, be global domination. Here's my hockey stick. I'm like, I'm really glad that your 5-year plan is to take over the world. Where do you want to be next year? And getting really, really good clarity on, where do you need to be next year in order for you to succeed? And, the reality is, it happens to be that recruiter.com was an OTC company when I got there. They were an over-the-counter company. So they're already public. We actually just took them up to NASDAQ with a great team of people.
Okay, gotcha.
This past July. So we uplisted to NASDAQ. People think of SPACs as like a backdoor way of in there being a public company on a different market, and then uplisting to NASDAQ is also another alternative to that overall process. But, we're now, a small cap company or a micro cap company, on a NASDAQ platform. It's a huge accomplishment, because under 1% of companies that are OTC actually make it up to NASDAQ. So it really was a big accomplishment. But it doesn't happen overnight. It doesn't happen accidentally. You got to map out exactly what you want to, where do you want to be from a sales perspective, from a financial controls perspective, a product perspective, a marketing perspective. And there are going to be things that lag. So why do you deserve to be there? Why do you deserve to be acquired? What do you actually have? Are you ready for due diligence? Don't think for a moment that if you're running a SaaS company and you want to be acquired, that the company's not going to do extensive due diligence. What does that look like? Do you have, when they're buying your company, either they're buying your company for its people, you're buying your company for its IP, you're buying your company for revenues, you're buying a company for some combination of everything, the market strategy, et cetera. And really think about who is going to be the acquirer. Who do you want to be? Who do you think is going to be the acquiring partner? And then does that really, really make sense or not? If you're incredibly technology oriented and you have an incredible tech stack, well, if you've outsourced all of it, that adds a little bit of challenge that someone's going to want to acquire you, even though all of your tech is really being done by somebody else. If you MVP'd your product on top of someone else's shell, is that something that's really going to happen there? If you're supposed to be a SaaS company and yet the bulk of your revenue is consulting, well, it's fine to be a consulting firm, right? Because you're making payroll with it, and kudos to you for making payroll. But where's your growth actually coming from? Are you showing that the growth of your core element is really there? I always do what's called, it's an accounting term called an asset test. And you basically say, you draw a table, left side, right side. On the left side, you say, here are all the things that we talk about we are. And here are all the things on the right side that we really are. And you really want, the left side minus the right side is not so crazy. We could always be aspirational. We can always aspire to say, oh, we have a 1 day, we have a 1 day installation, or it's really quick to get customers up and running. That's great. It could be, a week, but we'll all aspirationally talk about, as if it just happens automatically. That's okay. But to say that we have 1,000 features and we really only have 2, or to say our product does X and Y and it really does, A and B, that's probably where that litmus test is a little bit off.
Gotcha. And how early do you think, like in the journey of a company, like should founders start thinking about all of this stuff, making sure that everything is they're thinking about who's going to acquire them, making sure their books are right, making sure all of the asset and the T-chart you just described. Yeah. So look, the question is, when is the right time to sell a company? When's the right time to buy a company? There's probably an inflection point. My own story was at the beginning of '98.
we really saw emerging more standardization in the mobile development world. So part of our real asset is that there were very few companies doing real mobile development for professional applications back in the 90s. Very, very few companies. We knew all of them, et cetera. And the tools were getting easier to use. And so our real core asset is we had a skill set that very few companies actually had. And that was going to dwindle over time. At the same time, we were very big in pharmaceutical sales force automation. The pharmaceutical companies were going global, and they wanted us to go global as well. So we were operating up in Canada, in South America, but we need to go overseas. So it was really a point where, either we need to raise venture capital money or be acquired. And we just saw that the effort of getting acquired would be similar to actually going through a venture capital model. So if you're, don't think for a moment you can maybe raise money without having good financials, good financial controls. You're stewards of capital. When you run your own business and you have no capital, it's your own money that you're moving from left to right pocket. When you're taking in someone else's money, there's a discipline that you need to have, et cetera, associated with that. But don't be afraid of strategic partnerships either. Not bad to take on a partner that's going to own, 10, 15% of your company and bring you the things that you don't actually have. But it's also, Shaheem, comes to, why did you start a company? Are you out to change the world? Are you out to make money? Do you want to prove that you had the right thesis, in building out your overall product? And then, the old Shark Tank model, right? Are you, is your product its own standalone company, or are you an add-on to someone else's company? My first company, we got acquired by our biggest partner. It was easy, right? It was an easy conversation, right? Hey, we want to be acquired. We'll set something up, and makes more sense for our partner to acquire us than for someone else, because it would have jeopardized our partner's reselling of our product had we gone into someone else's hands. So you want to create a little bit of friction there, right? So how are you going to actually force that factor? I think those are probably the things that that you want to see. And obviously, the best way to do this is, hey, we're growing so quickly that we need capital. We need infusion of capital. And, rather than doing it yourself, you want to de-risk the situation. You've been doing it for 7 years already. You're looking for, you're looking to do something else, et cetera. And you're going to be able to bring on, better talent, better quality, surround yourself with people who have been there and done that, and let you make their mistakes instead of your own mistakes.
Yeah, fair enough. No, that's amazing. A lot of good stuff there. Evan, thank you for that. Thank you. Let's switch gears into your industry now. And I'm sure you get asked about this all the time, the Great Resignation. And so thinking about our founders who are trying to build their companies right now, grow people, grow their teams, what advice do you have for them, growing their teams during the Great Resignation?
Yeah, you are not without challenge. So here's the interesting thing. The Great Resignation really is the greater resignation. Right. So what most people don't know is that while we all went nuts and crazy, we called it in October, 4.5 million people quit in January, blah, blah, blah. 3.5 million people monthly quit on average in 2019 per month. Right. So most people don't know that the US churn, right, the natural turnover in the US pre-pandemic was around 22 to 25%. So if you have 160, 170 million working people in the US, take 22 to 25% of that. That's the churn. 3.5 million people a month were churning. So the reality is that it was a greater resignation. 1 million more people quit. Oh my God. Now, by the way, nothing to sneeze at. 1 million more people quitting and moving around. That's a crazy number. The other crazy number is, while you look at, or one looks at the monthly job report, right, that comes out from the Bureau of Labor Statistics, there was over 6 million people hired in January. 6 million people were hired over, I think 6.1, 6.2 million people were hired in January. So if you're looking to hire development people, you're fighting up against now all the other companies. And what they started to do is actually stock up on employees, like we were all stocking up on Purell at the beginning of the pandemic.
Yeah.
Right. And by the way, I met with one of our clients, the global head of talent, and she was telling me, look, we don't have a hiring problem. We have an attrition problem. And you're going, well, you're going through that process that you and I talked about at the beginning, right? Post a job, collect resumes, screen candidates, interview candidates, and hire. Well, guess what? If I'm interviewing and if I'm trying to hire 10 people, I'm going through the same process. Maybe I have more people coming into the funnel, but rather than only hiring 10, I'll hire 15, right? I'll hire 12 or 15, knowing that 20% are going to leave within the first 60 days, Another 10% are going to leave 30 days later. So I'm stocking up on employees. And the challenge for the small business owner is they're taking up all the right people, right? They're wage inflation, they're paying them a ridiculous amount, or they're paying them significantly more money. And that's why you're really seeing the rise of these outsourced development companies, right? That you're just seeing now pop up left and right. We've been fortunate. We've actually signed a few of them as clients ourselves because they too are growing up. You know, the thing that we all have to remember is anytime there's been a major macro event in the US economy, it's changed the job market forever. It never reverted. I'll give you two examples. So let's go to Y2K, 1998, Y2K, everyone's freaking out, Y2K. What grew up in the Y2K environment? Outsourced IT development, right? Everyone in the US was working on the stuff. We need someone to go modify COBOL code, et cetera. Let's go to India. Have we taken that back? When Y2K was over, did we say, hey guys, thanks so much, I'm taking all my development back? No, we found other uses for that. Early 90s, there was a recession in 1992, wage recession, and outsourced call centers, right, started to happen. Anyone know anyone that works in a call center in the US? I do, because we're in that space, but there's far and few between call centers that are now in the US. Keep going, in the early 2000s, we started outsourcing. Remember the recession that came in there, and there were other complexities there, real estate, et cetera. We started outsourcing data centers, right? Amazon, Google, Microsoft. Anyone know anyone that's now working in a data center? Are you building your own data center, your company, or you outsourced your data center services? So, you know, there are many, many of these examples where we have now used to do something one way. We changed there was a macro event that changed the way that we're going to work, and it's actually stayed in that environment there. So I think that core competency of your founder companies in development, taking on those roles, but yet leveraging outsourced development services to get things done in a time fashion that you need. The other advice is really start to build a bench. You know, I think there's a huge wage inflation in the middle market. I think there's less in the entry level and really less at the senior level. I think the real pressure is on the middle level. So someone that was making, let's just make up a number, $80,000, you know, 2 years ago, that same role, they're probably getting paid $120,000. That's a 50% wage increase. And they haven't done anything in 2 years, except moved.
Right.
You know, we have a client of ours that was telling me that in one day, one of their software engineers, who's not the greatest software engineer on the planet, right? Guy didn't invent Java, but in one day went up by over 40% salary just by getting 2 competitive offers at the same day. Just amazing. Just amazing to see these things happen. So there's definitely a war for talent. We talked about that, I think, 2 months ago on CNBC. You know, the war for talent is on, and you're going to see that actually happen. The good news is that the world's getting smaller. You know, this work from anywhere that you keep hearing about is really going to morph this year into hire from anywhere. And there's a good example, right? If I can't find a Java developer to work for your company, if you can't find a Java developer that's in the area or in the US, what do you care whether they're living in Latin America or living overseas? It doesn't make a difference to you. And there's some really, really awesome companies like Andela, for instance, you know, that are building development teams in South Africa. You know, so just some amazing companies doing amazing things to really fuel this need that we have for high-class developers.
Yeah, and I think like the way that it's headed, you know, based on what you're saying, it's like eventually like outsourcing a lot of a business's function starts to make sense, right? For example, like we're like an outsourced sales agency. And I think the demand for that really went up during the pandemic when they're like, okay, well, do we want to commit to having salespeople internally? It's already so hard to find salespeople. They're so expensive, so on and so forth. And so this starts to make sense. Of course, outsourced developer starts to make sense. Do you see that trend continuing with like, you know, maybe 10 years from now, the next thing happens?
Yes. You know, I think that, you know, the outsourcing was developed by Jack Welch, actually was the first person to actually start outsourcing components of their manufacturing process, of their supply chain. You know, if someone else can do it better, stronger, faster, less expensive, more reliably, then why not? And there's nothing wrong with that, right? You know, we've outsourced lots of things. Like we talked about accounting, right? We talk about legal. these are critical, essential things. Yeah, but we bring on experts and let them do it. And when we need them, we tap into them. So why is that not how we're doing other things in our overall business itself? There's just no reason not to. And so, yeah, I expect it. Look, I do expect that the hire from anywhere motif, that model will really play a stronger factor there. And again, as a business, you want to control your P&L, and this is a great way to control your P&L by having, fixed cost outsourced development, or fixed cost, whether maybe it's someone managing your ad spend. It really depends, whatever you're doing. But having a program that you could scale up and scale down, certainly from a business perspective, makes sense. In the old days, we admired the companies that had 50,000 employees.
Right.
Today, you're like, gee, I did it with 20. Right? Isn't that a pretty good thing too? So I think those are probably the trends that you're going to see this year as we move away from work from anywhere, have that morph to hire from anywhere.
Gotcha. Perfect. No, that's great. And Evan, kind of like just wrapping up here, where do you see the future of recruiter.com? You guys of course have like a ton of great technology being built, like that's built into your platform. Where is recruiter.com headed?
Yeah. So, we're going to continue to build out career communities. We own the technology, and I think that a career community is different than a job board. A job board is a posting thing. A career community is where someone of like-minded mindset, whether it's industry specific, et cetera, goes to learn more about that specific industry, learn more about that specific segment. So I predicted last year that the return of the niche job board is really going to come as the world starts to change around. And I think that really makes a lot of sense. We're going to continue down that path. We already own MediaBistro.com, OneWire.com, Scouted.io, all these different job boards around specific sectors. And we're going to keep doing that into new environments, whether it's crypto, financial, sales, et cetera, all under the Recruiter.com brand. I think the other is really being able to continue to, as a SaaS platform, service smaller and smaller clients over time. We have the luxury of knowing who our market is, right? When we started this process, we knew who our market is. Our market's recruiter.com, right? We are the destination site for recruiters and recruiting, right? We knew that already. And what we've been working on really in 21 was what's the product fit for that market, not the opposite. What's the market fit for my product? What's the product fit for my market? And we really did that in 21. And now we're really about scaling and delivering that more effectively, more repeatedly, making mistakes, just making them faster, but really being able to take our platform and not just service the large companies that we've been servicing, but really every small business that's probably got like 20, 25 people. You guys, if you're hiring a person a month, I think our minimum number is like one. If you're hiring a person every 6 weeks, you probably need someone like us. Our prediction is, and my prediction is, just like, and I was in security in the early 2000s. Now everyone pays someone for security, whether it's built into our email system, our hosted VPN, or our network security, or our chief security officer. We're all investing on a daily basis in the security of our network. I believe, and we believe at Recruiter.com, that any company with 25 plus people will be spending money on talent acquisition and retention. And we really have the tool set, we have the platform, we have the breadth of our on-demand recruiters to really deliver that at scale and really help everybody with the biggest challenge that people are going to face in 2020, which is recruiting talent.
Amazing. Thank you. And what's one piece of advice that you would want to leave our founders listening in with?
Your most important asset is your people. You want to allocate resources to the things that are going to be most critical for your business. If development's most important, you're going to allocate resources to development. If marketing is most important, or lead generation, you're going to allocate resources to most important. Hiring people, do not take for granted that you're going to have a challenge hiring people. And we're here to help you out. And I'll give you a little URL. It's start.recruiter.com. So if you go to start.recruiter.com, you can see it's a very, very simple SaaS platform, SaaS subscription to really support even the smallest hiring needs, not all of which come without any placement fee whatsoever. So do not underestimate the investment you're going to make in 22. In fact, I'll throw one more number out. We actually predict that the U.S. economy will invest or spend, depending on how you look at it, $50 billion more on talent in 22 than in 2019. So $50 billion more will be spent. in bringing on talent. And you look at things like Goldman Sachs and Starbucks, and some of the numbers that they posted have been surprise expenses when it comes to, hiring and retaining. So $50 billion more. So rest assured, you're not alone in that process.
That's nuts. That's nuts. And where can our listeners connect with you?
Sure. I'm on LinkedIn. The URL just ends with Evan Sohn. You can go to recruiter.com. My email is evan@recruiter.com. You can follow us on LinkedIn. You can follow me on Twitter. Again, it's Evan Sohn. I've been around for a while, so I have pretty much the natural URLs. And that's probably the best way to get in touch with me.
Perfect. Evan, thank you so much for coming on our show.
Hey, Shaheem, thank you so much. It's been a real pleasure, and I look forward to catching up with you in a few months.
Me too. Thank you.